of course, everything right now is about the ETF. No one has a crystal ball, but based on what is known, what do you expect to happen next week?
I expect we're going to get approval for the very first Bitcoin spot ETF. It really is quite epic. I mean, just a few months ago, most people that I knew were saying it's not going to happen, it's not going to happen. And now it looks like it actually will. Of course, it's not a done deal. We can't say 100% certain that we're going to get it next week, but it would be really, really aggressive move from the SEC were they to pull the rug now. I have been thinking a bit about what the worst case scenario would be. Obviously, the worst case scenario would be the SEC being totally aggressive and at the same time canceling the Bitcoin futures ETF so that we couldn't then say that it's inconsistent. They've never done that before, though. That is not even a 1% likelihood. If they really wanted to play dirty, they could delay again. That's possible. It would mean some scrambling on the part of the ARC ETF, for instance. Maybe they'd have to refile. Who knows? It's most likely that the SEC will give the green light next week, because not doing so is just going to create a colossal amount of work for the SEC, which, as they have often reminded us, is understaffed.
Yeah, I was just about to ask what the impetus would be to play dirty at this point.
It would be the SEC not having read through all of the documents, having perhaps some internal discussions they still want to have, or perhaps just being thoroughly pissed off with the entire industry. But I'm not saying that the SEC is unprofessional, but that would be the impetus. So the most practical reason would be that they haven't had time to go through the documents. But again, I think that's very unlikely. The most practical thing to do now, the most efficient and the safest politically for the SEC, is just to approve these already.
There was a survey out by Bitwise. I don't remember if it was yesterday or the day before. I thought it was really interesting, a survey of advisors. And my takeaway from it was that many advisors are still thinking there is not going to be an approval, but that if there was, they would be very interested in helping their clients allocate through an ETF. What did you make of that survey?
We do have to bear in mind that most advisors don't follow crypto. Most, as we saw from the survey, in fact, which is an incredible document. I recommend everyone read it if they can. It shows that most advisors are not interested in crypto. Something like 70% have not allocated clients to crypto, and no, even more than that. Sorry, something like 90% have not, and 70% of those have no intention of doing so. So they're not following this, obviously. Otherwise, a much higher percentage than 40% would believe that we do have one coming. It is interesting that many of them say those that are planning to allocate are waiting for an ETF. Well, there's a solution to that. If I can throw in one more thing about that really interesting document you mentioned there, Tanaya, and that is, the most interesting part of that, always, every year, is the barriers to investment. That is the key of this document, for me anyway. And the big takeaway this time is that one of the key barriers, which is lack of a liquid, reliable, exchange-traded vehicle through which to get exposure, well, that barrier is probably about to be removed. And other barriers, such as lack of regulatory clarity, there's progress on that. It's slow and excruciating, but it is progressing. Others are the volatility. Fair enough. That's what investors' advisors have to take into account their clients' needs, and many of them can't really afford the kind of volatility. Fair enough. But one takeaway, my biggest takeaway from that list of the barriers, is that there is still so much education that is needed in this space. Many investment advisors say that they would not allocate crypto for their clients because it's a scam, or because they don't understand it, or because it's associated with illicit trade, that kind of thing. There's just a lot of education that is still needed. And here's the big kicker: the approval of Bitcoin spot ETFs is going to kick that education onto a different kind of level, different kind of mainstream acceptance. When we see Bitcoin in the same frame, in the same sentence, in the same ad as names such as BlackRock, Invesco, Fidelity. When Bitcoin becomes part of the mainstream financial landscape, that's a different level of education. And so we'll see that list probably change quite a lot between now and next year.
Yeah, I was going to say, how do you maintain the argument that it's a scam once this approval, if or when this approval goes through? Do you expect inflows post potential approval to live up to the hype? I've seen a lot of projections around, but obviously, we're talking about this Bitwise advisor survey, and that's been very interesting. Needham put out recently a different survey that said the biggest opportunity for the Bitcoin ETFs is going to come from the advisor space. but nevertheless, they found a similar thing. A lot of the advisors weren't interested. Their clients aren't interested. And then, separately, they said that of people who currently buy Bitcoin, those are the people who are most likely to be interested in ETF. And even those people would just prefer to buy spot on Coinbase or something like that. So what do you, what are you thinking for inflows in the months to come after this potential approval?
And also, where would they come from? Will it be retail? Will it be institutional? Those are excellent questions. No crystal ball, like you said in the beginning. I have absolutely no idea, to be honest. But gut feeling, we're probably overestimating the day one impact. I mean, we can remember when the Bitcoin futures ETF launched, we're probably extrapolating from that. And that was a blowout launch. I mean, Bito ended up being something like one of the most successful ETF launches ever. Then again, that was in the middle of a very hot market. Bitcoin had been shooting up in the weeks prior. Everyone wanted a piece of the speculation. We're not in that market now. This is not yet a hot market. We have a long way to go before we can get there. So I don't think we're going to get the same kind of blowout. Plus, there's more competition this time. Plus, spot is not that hard for interested parties, as you suggested, to get. So again, I hope I'm wrong. I hope we get a fantastic first day. And I certainly am getting my popcorn ready. But I do think we could be disappointed. However, I really do believe, Tanaya, that we are underestimating the medium and longer term impact. As we were just talking about, the educational value of the investment advisors and the BlackRock, Invesco, Fidelity, etc. marketing teams gearing up to educate the mainstream public about the advantages of this kind of diversification. I mean, let's face it, it's real diversification here. So we're underestimating that, I believe. Even if most investors in the United States invest 0.1% of their portfolios in Bitcoin for diversification purposes, that's massive inflows.
Let's get away from the ETF for a little bit. The ETF has been a big driver of Bitcoin price. What do you make of the volatility in crypto this week, which was not, Bitcoin alone? It seemed to be kind of a straight line up over the last couple of months. At least that's what it felt like. And then, a little bit more tumultuous to kick off the new year. What do you make of it?
Oh, it's welcome back volatility. We'd missed it, to be honest. I mean, the doldrums of the past 2 years, I'll guess. I know 23 was a much better year than 22.
Remember before BlackRock filed their application, how absolutely flat and stagnant it was in the market last year.
Absolutely. And even after the initial flurry of excitement had died down, volatility is not really back. It's a bit better, but it's not really back. Liquidity is not really back. Kaiko put out their Q4 report recently, which shows that liquidity in terms of market depth has not yet recovered to pre-FTX levels and hasn't really moved that much, even after the BlackRock announcement. Now, this could change once the ETFs are launched, because we do have some very big name authorized participants coming into the market. And it's going to be in their interest to do some market making on Bitcoin itself as well, I presume. So I do think this will change, and that is going to start a whole new flywheel of investor demand. The lack of volatility, contrary to what the Bitwise survey is saying, the lack of volatility for most institutional investors is a barrier. Bitcoin's volatility, to pick the largest currency as an example, it's a feature. It's not a bug. For volatility, there's risk. So the volatility is what compensates the risk in outsized returns. Also, volatility is what brings in liquidity, because for many of the market makers, if it's not volatile, they're not really going to be able to cover their hedging costs. So it's just not worth their while. High frequency traders as well, they need more volatility to be able to make money in the Bitcoin market. When they come back, volatility will come back, liquidity will come back, and the market will start to recover the luster that it used to have before everything went south in 2022.
Now, obviously, the ETF has been a big driver of price, but it's not the only one. And you and I talked a couple of days ago, and you pointed out, when Bitcoin had that brief crash, that there were even bigger moves in other coins. What does that indicate to you about other narratives that are at play?
It's still a Bitcoin-led market. There's fascinating moves going on elsewhere in the crypto ecosystem, especially on some of the mid-cap tokens. huge moves, a lot of volatility there, as you were implying earlier. But it is still a Bitcoin-led market, and we can see this in the Bitcoin dominance, which has been steadily climbing over the past few months, ever since the beginning of 2023, to be honest. Now, this is normal for the beginning of any new cycle. Bitcoin is the on-ramp for most mainstream investors, and even for many crypto natives in the early stages, Bitcoin is the relatively safe option, and we see a lot of rotation from some of the smaller tokens into Bitcoin. We're starting to see some rotation out from crypto natives into some of the more volatile, higher potential tokens, but for the mainstream investors, especially those that are playing the ETF narrative, and especially those that might even get involved in the ETF when it launches, Bitcoin is the on-ramp. And so we will continue, I think, to see Bitcoin lead the market up over the next few months. But again, especially it depends what happens to monetary liquidity and interest rates. When the market gets more comfortable with the overall crypto risk, they do start to tend to, one, diversify into some of the small tokens, and two, go further out on the risk curve, which means Bitcoin will start to rotate. Bitcoin holdings will start to rotate into some of the others, in which there is a lot of fascinating technological progress.
What else are you watching this year in terms of Bitcoin drivers? You just touched on some, and here we talk so much about these three key things: the ETF, the halving, the rate environment. What else are we missing?
The diversity of narratives that is emerging around Bitcoin. In the last cycle, you may remember, it was about monetary liquidity, really. It was about risk assets. It was a macro play, and the correlation was startling. We are going to continue to see correlation for some time because Bitcoin's price will always be influenced by monetary liquidity and overall market sentiment. But this cycle is different, Tanaya, in that other narratives have a higher prominence than in the last one. And the main other narratives are, one, not a hedge, not so much against inflation, but against currency volatility, of which we have seen an astonishing amount, and it's only going to get more so as the year progresses. Two, a hedge against geopolitical and global economic instability. Digital gold narrative is much stronger than before. And three, the technological progress in Bitcoin has been kicked up quite a few notches, not just with the emergence of ordinals in January of last year, but we also now have serious projects exploring more deeply smart contracts on Bitcoin. I say more deeply because this has always been going on, but now there are working projects doing this. Stable coins on Bitcoin. The utility of Bitcoin is finding different niches to occupy, and the additional use cases is bringing in different types of users, and that's a fascinating narrative. Bitcoin as the hedges that we've talked about, as the risk assets that we've talked about, but also Bitcoin as a tech play. This is something that we didn't really talk much about in the last cycle.
I want to look at stocks a little bit. Crypto stocks outperformed Bitcoin last year, particularly the miners. And obviously investors have very high hopes for Bitcoin this year. I'm not going to ask for your price target or anything like that, but what's your outlook for crypto stocks this year relative to the coins and relative to Bitcoin specifically, I guess?
Well, obviously nothing I say is investment advice, and I do confess I don't follow these that closely. I haven't spent a lot of time poring over the balance sheets, for instance, but I will say one thing that I've observed about some of the big name crypto stocks over the past few months, and that is the diversity of narratives. Diversity breeds resilience. We talked about Bitcoin's diversity of narratives. That puts a higher floor under Bitcoin. I would say the same with some of the crypto stocks. One of the reasons they've outperformed, or some of them have outperformed over the past year, is because they were very punished in 2022. So a lot of that was recovery. There's also some interest rate plays there because a lot of them have quite a lot of debt. But let's take Coinbase as an example. It is a crypto trading play. When you think crypto volumes are coming back, then obviously Coinbase will make more money. But Coinbase is now also a blockchain play because it has its own proprietary layer 2 on which it will be earning quite a lot of money, I expect. How are analysts going to value that? CleanSpark, to pick another example, top of my head, was in the news the other day. It's a Bitcoin miner, so it can be a Bitcoin, but it's also launching an in-house trading desk to earn additional income on its Bitcoin inventory. So it's no longer just a Bitcoin miner. And so this kind of diversity of some of the crypto stocks is, one, a sign of a maturing market. These companies are growing in ways that we didn't really expect before. And two, it highlights the additional risk, but also the additional potential for some of these related plays.